Hello and welcome to today's live webinar where we look at ASX investment opportunities in review. Any individual reading this should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Up on screens, the performance of the ASX 50 model year to date. The basis of the ideas expressed in the opportunities in review are largely centered around the algorithm model, and we consistently see performance here that is outperforming the underlying indexes or benchmarks, which is very encouraging. If you'd like to get access to the technology that I'm presenting today, we're providing a special where the full professional level access, you get 12-month subscription for $1,320. If you'd like to take advantage of that, please visit investorsignals.com or email Leon at Investor Signals, or alternatively simply call the office and one of our staff will help you get set up with that technology offer. Moving straight into a graph of the XJO. So as we conclude earnings season, I think for the most part earnings have come in mostly in line with expectations, probably slight downgrades to 2019 numbers. We're probably only looking at around 5% EPS growth into 2019. But in a low interest rate environment, I think equities are still reasonably well supported with a solid global backdrop and moderate levels of earnings growth. I think we do have to recognise that from historical levels, the market's trading on very high PEs, and in certain defensive names, we've seen an expansion from PEs previously sort of around 14, 15 times to seeing those pushing up to between 22 and maybe as high as 28 times earnings. So there are pockets of the market that are expensive, and that's just something you need to be mindful of. So our base case is that equities mostly move sideways, which is a good environment to be running covered call strategies and then using the algorithm model to pick stocks that have had a sell-off and values emerged, which will be part of what we go through today. Given that it is the end of earnings season, I think what we might do is just take a quick look at where we are on the earnings calendar, and then I'll roll through all top 100 stocks, and we'll do that pretty quickly, and we'll narrow down our high conviction ideas to think about in the weeks ahead. So if we look at the earning calendar, and just running through sort of these, if we backtrack, Tabcorp was one of our high conviction ideas, great outcome there. AGL bit flat, nothing too much exciting there. Crown was a high conviction idea, good earnings growth. Suncorp surprised the market, stronger earnings than expected, so we might just stop and reflect on that when we look at the chart today. James Hardie pretty much in line. News Corp maybe disappointed a little bit. REA I thought was a good result. AZJ, we keep that on our watch list. I think that creates a buying opportunity later this year, early next year. All the banks are really quite sort of soft and under algorithm sell signals. JB Hi-Fi I thought did better than the market expected. Computer Share, 10% growth, but very expensive. CSL, terrific, 10% growth. Maybe the market was thinking sort of maybe 15 to 20% growth, but still the outlook's very bullish there for CSL, but is expensive. IAG disappointed slightly on an outlook statement, but still looks pretty good as a buy right. Seek deferred growth because of increased capital expenditure, but still the business is growing well and looks solid. Wesfarmers, about 5% growth as a conglomerate. ASX, surprise, we say 6 to 7% earnings growth. Maybe the market was thinking more sort of 4 to 5 range, so that was a pretty good result. Downer, 2018 results came in line, but 2019's been upgraded, so continue to watch that name over the next 6 months for a buy on the dip opportunities. Origin disappointed. QBE came in line. Sonic, probably forward guidance was a little bit softer than the market had expected, so that's a buy on the dip and sell covered calls. Telstra, that's a 2-year turnaround there with the demerger taking place. That should mean the low's in place. Treasury Wines was a good result, but stock is expensive. Evolution, we like that. Encouraged by the fact the company has such low levels of gearing and it's the lowest cost gold producer in Australia. Link, we want to buy that on a pullback. Ansell, we thought was expensive. It sold off 10% following the result. This comes onto our high conviction buy list, and we're just waiting for the algo buy signal on that, so I'll cover that today. Fortescue looks cheap. Maybe the recovery won't be until next year, maybe there. But Woolworths, 9 to 10% earnings growth, but very expensive from a PE, so that was a buy on the dip, and it's pulled back into that range. We'll look at that today. Amcor merging with the main US competitor there. Bit of a game changer for Amcor. BHP in line. Healthscope, thought the outlook there looks good. I think sort of the restructuring of their property assets into a real estate investment trust and freeing up capital should bode well for Healthscope over the next 12 to 24 months. Coca-Cola, thought that result looked a bit soft. Lendlease in line. Flight Centre's got some issues which we'll look at today, and that may create a buy on the dip opportunity there. Iris result was better than expected, but very expensive. Qantas starting to soften a little bit. Cube's result was better than I expected. Brambles, I think returning to growth, but only moderate levels of growth. The spin-off of their plastic pallet business probably next year helps to unlock some value, so we'll watch that for a buy signal, but it's probably mainly moved sideways. Medibank, we're cautious here. Low revenue growth, thought the result might disappoint, and it did. We've seen that stock correct almost 10%. Star was the result on Friday, so that was one of our high conviction ideas. The thesis there was VIP gaming revenue would come in ahead of expectations, and it did. It was up 50% on the same time last year, and the stock's back at fair value now at $5.50. That was effectively our target, and that's where it's traded. Okay, and then coming into next week, we've got this week, Caltex tomorrow will be interesting, but we think that's full value, so nothing too exciting there. Boral, I think they're having problems with that Headwater acquisition they made over in the US. I don't think that's turning out to be as clear a value proposition as they first thought. Ramsay Healthcare on Thursday will be a good result to take a look at, and I'll update on the blog this week the analysis of these results. All right, so if we start today, what I wanted to do, rather than go through the recent signals, I'll do that after we go through. What I want to do is click on watch list. I'm going to come down. I'm going to select the ASX 100. I'm going to select any stock in the list, and then we're going to start toggling through them, and I'll share with you the thoughts as to the names that are our high conviction idea. A2 Milk's expensive. I was looking for it to come back down to sort of this 870 level, never sort of touch that, but it does appear to be building a pretty bullish structure there. Adelaide Brighton's been added into the model, into the ASX 100 model following the signal last week. Now, this is not a stock that I follow too closely, so I think for commentary we shuffle the support in there at around 612. Think about a stop loss below that, but certainly a name that start to run the numbers on a little bit closer now that it's been added to the model. AGL was also added back into the model after being removed in sort of April, May. We've now added it back in at $20 here. The stock's on a 5.5% yield, not much in the way of earnings growth. So buying it here and selling maybe a $21.50 or $22 call option and running it as an income line is something we're comfortable with. Aristocrat, strong growth name here, high or low at around $30. There's support there. Some of these I'll just skip through. Amcor, so as I mentioned, they're merging with or acquiring the main US competitor listed on the NYSE. So Amcor, assuming that transaction goes ahead, Amcor will be joint listed in the US and Australia. The market's a little concerned that they've paid too much for it on a valuation basis, but I think in the long run, it's a good transaction. we're under algorithm sell signals, so it's hard to get excited about it from a technical standpoint. But I suspect that we're pretty much in the support value there. Ansell. So this is a name that's made its way onto our high conviction list, and I urge you to make a note of this. And as the stock pulls down, so on any market weakness over the next week or two, if we see Ansell back around this $24 level, I think that's very good buying. I thought the earnings result was pretty reasonable. The market had very high expectations. A lot of these sort of US dollar earners have become crowded trades, and I think this sell-off creates an opportunity. Maybe it doesn't rally back and create a new high, but if we could buy it at around this 24 and trade back out at 26.50, I think that's a good buy. The banks so continue to highlight the lower low, lower high. We saw Westpac's margin pressure come through in their results last week, and I think that sort of continues to cap the upside rally in the banks. APA, there's some concern here that maybe the FIRB approval for the takeover of APA gets a little more complicated with the change in government and the increased scrutiny on retail electricity prices. So we're not really doing too much there in APA now. ASX, now this is very early days, but if we saw a sell-off in the back half of this year, maybe back down to $60, I think that's a strong buying opportunity, so we'll continue to watch that. Horizon, this is one just I'll continue to draw your attention to this. It's clearly a negative structure in place, and it looks like it's probably going to maybe break down and test this 375 level. But later this year or into the early part of 2019, I think this stock will get oversold and it'll create a good buying opportunity. So that's a longer term idea that we're following there. All the banks under lower lows, lower highs, so we've been cautious on those. Now, BHP, this makes it onto the high conviction list. I think oil prices stay well supported. Iron ore looks okay. It's around this sort of mid-60 an ounce. So I think BHP can push back up to around $35. Boral, I think there's risks there to the downside. Bank of Queensland, we've covered the regionals. So Brambles, this was one that I chatted about. So on about a 3% dividend yield, 20 times earnings, the stock looks expensive. I think it is encouraging that we've seen a turnaround in earnings from sort of negative growth back to 3 or 4% growth, and the divestment of their plastic pallet pooling business unlocks value and maybe sees capital returned to shareholders next year. But in the interim, you could probably just run a buy right strategy over Brambles. Car sales not doing there at the moment. CBA, lower low, lower high. Coca-Cola thought this result was pretty soft, and I suspect that you got a high in place here for Coca-Cola and it slowly sells off now. Challenger, lower low, lower highs there. Simic Group, now keep this one on your watch list. Any market weakness, if you could pick this stock up at around sort of 46.50, I think that's great buying. The company's growing earnings 10-12%. It's on about a 3.5% dividend yield if you could pick it up at around $46. So that one sits on our high conviction list. Cochlear, good result, but not doing there at the moment. Computershare thinks expensive. CSL, good result. CSR, risky with the housing exposure at the moment. Caltex will watch that result tomorrow, but thinking the high's in. Now, Crown, this is another one. I think the earnings result was very strong here. I think it sits in a fairly defensive pocket within the Australian market at the moment. Low Aussie dollar, good inbound tourism numbers. I think increasing VIP, returning to the Australian market. So Crown's a stock that you could either continue to buy or buy it and sell covered calls, or simply wait for a slight retracement back below $14. But I think that stays as a standout asset in the Australian market at the moment. Cleanaway not doing there at present. Now, CYB, this is the Clydesdale Bank in the UK. They acquired Virgin Money. Watch this. If we see another algorithm buy signal back at around 550, it will be added to the high conviction list. But for the moment, still looking a little bit expensive and just waiting for a bit of weakness in the US market to create a buying opportunity there. Domino's, I didn't think this result was that good, and I'm just watching this. I think if the market pushes back up to around $60, for me, that's a sell. Downer EDI, so FY18 earnings came in line. FY19's been upgraded to 13% growth. The stock's on a 4% yield at the moment. You can't sell covered calls over it. So for me, it's pretty close to an area where you want to be taking taking profit, and you want to be now sort of waiting for a pullback with a buy on the dip opportunity. Evolution, so this goes on to the high conviction, so make a note of this one. I think this is a buy here at around this sort of 270 level. They only have 5% gearing on their balance sheet. That'll probably be cleared up this year, and the company will be in a net positive position, so probably sitting on a couple of $100 million of cash, and they're one of the lowest cost, or the lowest cost gold producer in Australia. Gold's corrected a couple of $100 an ounce back down to sort of 1180, and I think this is a buying opportunity in Evolution. Flight Centre, I think they have some issues here at the moment, but watch it. Depending on how deep this correction goes. Certainly if we were to see it back at around $45, I think it'd be a great buying opportunity. Fortescue, value into next year. The REITs all look full value to me. Healthscope, improving fundamentals here, and I suspect that the low's in for Healthscope, and it's just a gradual long term. It's certainly not a high growth opportunity or just jumping back to it, but I think over the next 2 or 3 years it slowly just grinds higher. Healthscope. Harvey Norman's, I think concern there, lower low, lower high. I think probably want to be on the short side of Harvey Norman's. There's still some structural issues there that the company faces. Insurance Australia Group, covered call strategy there. Moving through a couple of these. JB Hi-Fi, so I like this name. I thought the result was good. Buying this on any pullback, I think, is the better way to play Australian retail. James Hardie, reasonable value dependent on US housing recovery. Link, so this is one that we've covered. We mostly missed this rally. The view was that it was good value coming into earnings, but it got ahead of us. So now we just wait and patiently see if in the back half of this year we see a buy opportunity there. Medibank, so this is an example where the last 2 earnings results delivered no revenue growth, so we're pretty cautious, and we actually sold this stock ahead of the result. Strong value for me doesn't represent until about 270, 280, but I think for the most part the stock just moves sideways, so it's a covered call strategy there. NAB, lower low, lower high. So Newcrest and Evolution, good sensible ways to play a recovery in gold price, so they make it onto our high conviction list. Origin disappointed here in earnings season, so we cognizant of the pressure on retail electricity prices, which is going to be a tough environment for Origin to do well. So we're just trying to identify where this gets oversold, and I suspect somewhere around this $8 level is support. So it's a name that you just probably want to think about slowly accumulating and not being too aggressive on the entry level. Oz Minerals, so exposure to predominantly copper and gold, but at around this sort of 840, it looks like reasonable support. I consider Oz Minerals, obviously, it'll have a little more volatility than, say, BHP and Rio, so you may want to think about running stop losses on these names, but we're under algorithm buy conditions, and I've added Oz Minerals onto the high conviction list as well. Perpetual, just to jump back to there, I think this company continues to have problems with outflows from their funds management business, and I think this is another lower high pattern that's in place there on Perpetual. Qantas not doing there at present. QBE. I think QBE is one to keep an eye on into the back half of this year, early next year. It's been under algorithm sell conditions for a number of years now. The latest earnings result, I wouldn't say was great, but there was no more surprises or disappointments in the result. So we may be in the early stages of seeing QBE put in a low, and the company is looking at strategies to rationalize its assets or its portfolio, which often will lead to unlocking of value for shareholders. So we've got an early signs of a higher high there. We don't yet have the higher low structure, so we'll watch that in the back half of this year. Rio. So I think Rio, with iron ore at $63 a tonne, a lot of capital to come back to shareholders. Rio should find support somewhere between sort of on the downside around $67 to $72. So a little bit like Origin, difficult to pick the ultimate turning point here, but for my money, value starting to emerge there. Same with South 32. I put South 32 in the same category as Oz Minerals. I think you got greater risks to the downside than you do in BHP and Rio, and you want to be using a stop loss in these names on a break of support. Star Entertainment. So this was a high conviction call coming into Friday's earnings result off the back of expected uplift in VIP. We've seen that eventuate. A little like Crown, I think the stock's full value now, but well supported on the downside. So you can either think about taking profit, you can wait for a pullback, you can own it, sell covered calls. I think we're in a period where it consolidates for a while, and then maybe coming into the result in 6 months' time, we see another slight push higher there in Star. Sonic, so I like this on a pullback below $25. So that's one you should add to your notes. Santos, keep an eye on this. Any weakness in oil prices, if you could pick Santos up sub 650, I think that's good buying. Suncorp, good result, but looking a little bit expensive. Sydney Airports, I thought the result here was good. We're continuing to see solid growth in the retail side of their portfolio. Good inbound traffic numbers, and owning it and selling covered calls and stripping out the dividends makes sense. Tabcorp post the TATS deal. The stock is looking a bit expensive up here, but well supported, not much in the way of downside risk. A little like Crown or Star, you can think about either taking profit and waiting for a pullback, or you can buy it and sell tight covered calls. I think it consolidates but stays up at the top end of that range. Transurban moves sideways. Telstra, the recovery's underway based on the split in 2 years' time of Infrastructure Co from retail. Treasury looks expensive. Unibail, this is a high conviction idea coming into their earnings result later this week. Post the Westfield merger, I think there's value to be unlocked, and we look for positive commentary for the company at the upcoming result. Westpac, we saw their margins shrink as a function of increasing offshore funding costs. And I think the banks, you just need to be very careful in this sector, because any deterioration in the credit cycle is just simply not priced into these businesses. They've got wafer thin provisioning for bad loans at the moment. They've been adding back pre-provisioned bad debts, which have been helping them to meet profit guidance. And there just appears to be no margin for disappointment in these banks. And if there is any deterioration in credit quality, I think the banks really are at risk. And long ago you should have started de-risking any overweight exposure from Australian banks. Wesfarmers, full value, so not doing there at present. Whitehaven Coal. Woolworths back at fair value at 24 times earnings. It was very expensive up here. It's delivered 9 to 10% earnings growth, but there's the early signs that the fast recovery in margins that they were enjoying 12 months ago are starting to plateau out a little. And how do you justify 24 times earnings for a business that may return back to 5% earnings growth. So I think ultimately fair value for Woolworths is about $27.50 and it bumps sideways, but it's a good opportunity to own it, sell tight covered calls, strip the dividends and franking credits out of it. Woodside, it's under algorithm sell conditions. We watch this one for the back half of this year if we see weakness in energy prices, which I'm not expecting. If we did, I don't expect that to last. So any sell-off here in Woodside would create a buying opportunity, and we'll revisit that later in the year. And there we are back to the index. So just to bring into screen the notes that I have on what we've covered. So on the watch list, ASX, high quality business, expensive, and we want to see a pullback. AZJ, perfect storm hitting that business at the moment. Buy opportunity will probably set up later this year, early next year. CYB, expensive, waiting for the next algo signal. Flight Centre, correction underway, waiting for the next buy signal. SCG, I'll review that another time. General ideas. So Healthscope, I think defensive long-term growth there. Encouraged by what I saw in the latest results. IAG, bit uninspiring, but sell a tight covered call over it and it produces good 10-12% cash flow. Sonic, value emerging below $25. Santos, I think if you can pick that up on a sell-off, there's an opportunity there. Sydney's a cash flow opportunity for portfolios, buy right. Woolworths I just covered. AGL's a buy right, don't expect much in the way of growth. Amcor, longer term value, the US merger should be good for that business. AMP and Fortescue are probably deep value turnaround stories, but maybe catalyst is not until next year. High conviction. So I think accumulating Origin on this sell-off, but just accumulate it slowly. I think there's headwinds there at the moment around this retail electricity pricing issue. Rio, but be a little more aggressive there with Rio, but still be mindful that could trade down into the $65, $67 range. SGR, very happy with the outcome there in Friday's result. Maybe a little bit of value left on the table, but not too much for the short term. URW, which is Unibail, we'll wait and see how that plays out in the earnings result, but that's on the high conviction. Ansell, I think make sure you've added that one to your watch list and look for the next algo buy signal, something around $24. Buy it and look for a move back up to $26.50. BHP looks like it's found support. Buy it for a move up to $35. Oz and South 32, a little higher risk, but keep those in mind. And then on the gold side, it looks like Evolution and Newcrest are oversold at the moment, and gold should bounce from where it is at the moment. Just to recap, strong earnings. I think Downer, Crown, Simic, Tabcorp, CSL, JB Hi-Fi, Seek, Aristocrat, Treasury. Weak earnings, one that I'm watching is Coca-Cola. Still mindful of the lower highs across all the banks. In the US, we're just adding a couple more. The new one today is Raytheon, which is a military defense company in the US. So the big two companies there, Lockheed Martin and Raytheon. So two that we're starting to build positions in are Win and Raytheon. All right, so just to conclude today, let's go in and go through the ASX Recent Signals. But the reason why I've left this to last is there's not too much in here at the moment that overly excites me. So AGL, we've covered that one. Buy right, not much growth. ARB, not doing anything there at the moment, nor in BSA. Dexus is a sell. Fletcher, not doing anything there. Hard to get excited about the building stocks right at the moment. Grain Corp, lower low, lower high, but I think there's better shorting opportunities. Harvey Norman, I think structural issues there probably weigh on Harvey Norman. IPH, not there at present. Mortgage, just watching this, starting to do some early research. It'll be interesting just to see if it runs into resistance around 185 there. NIB, just mindful there, the lower low, lower high. We'll watch and see how that plays out. Next, DC, don't follow this stock too closely, but within the technology space, good structure here, higher low, support there at around 670, run a stop loss below that. Not doing Regional Express, Rural Funds. South 32, we've covered that, looking at support around that 324, but stop loss below it. Silver Lake Resources, you probably shuffle support along there, but not really something part of our portfolio that we analyse. Whitehaven Coal, high or low, they're around 492, but again, not a stock that we spend too much time on. Woolworths, back into that value range around $28, but moves sideways. So you want to add a covered call. And there we have it. So thank you for listening in to the Opportunities in Review series during earnings season. Just going to have a break from these for the next couple of weeks. Just let the dust settle and see where new opportunities emerge. We'll continue to keep you updated via the blog. And thank you for the feedback on the Opportunities in Review. I think we did a pretty good job of picking out some outperformers leading into the earnings results, and look forward to helping you identify trades to add to your portfolio or investments to add to your portfolio through the commentary we provide on the blog. Thanks again for listening in.